All right, gang, we got a lot to talk about. We've got, let's see, the results of the presidential election are in. The crypto markets are liking what they've seen so far. The new administration's appointments are coming in fast and furious. Treasury rates are spiking. That means that Treasury bonds are plummeting. It could mean the collapse of the federal debt markets has begun. What should we read into this? What does it mean for our investments long term? Is crypto the answer to the woes of the Treasury Department? We shall see. All right, gang, we've got a lot to talk about. All this and more. It's time for Money Talks. All right, gang, welcome to another exciting episode of Money Talks. I've been on the road for the past 3 weeks. I was in the Middle East, actually, most of the time. I was in Dubai, Abu Dhabi, Doha, Riyadh for the FII conference, which was super interesting, and meeting a lot of really exciting companies, smart people. The Middle East is bustling, and I think its time is coming. More importantly, it looks like the time of the democratic puppet masters' control over the cryptocurrency markets is coming to an end, and not too soon, as far as I am concerned. Should have happened a long time ago. What we need is sensible, easy to understand, constitutional rules of the road. We need a regulatory state in this country that is right-sized for our Constitution. There are 3 branches of government in this country: legislative, executive, and judicial. There is no 4th regulatory branch of government, and that needs to basically be reflected in how our government operates. That is my belief, talking point of the day, and it doesn't just affect crypto. It affects everything from drug policy to defense policy, the kind of military industrial complex, deep state, up and down the board, right? It is the primary reason why we spend money like drunken sailors in this country, in my opinion, and it needs to be fixed. And I believe this is our best shot that we've had in the last 50 years of fixing and addressing this issue. Okay, I have some very interesting and some somber news that I want to talk about as it relates to Treasury markets and what's happening in the bond world. Before we get there, let's talk about what we're seeing with the Trump administration so far. As we were going to print here to start shooting Money Talks today, Trump announced that Robert Kennedy would be head of, I think it's the is it the Food and Drug Administration or Department of Health and Human Services? I forget exactly what it's called. I think it's the Department of Health and Human Services. And I think, if I understand correctly, the FDA reports in to them. So this is a big deal. I think that Trump is coming through on his promises to Kennedy and to the American people. That he was going to drain the proverbial swamp, and he seems to be following through on that. Earlier today, 18 U.S. states filed to sue the SEC and its commissioners, accusing them of unconstitutional overreach and unfair persecution of the crypto industry under the leadership of agency chief and Chairman Gary Gensler. The lawsuit was signed by 18 Republican attorneys general. It detailed how the agency has committed gross government overreach with its regulation by enforcement crusade against the $3 trillion industry, resulting in infringement upon states' rights to regulate their economies. I'm taking this summary from Eleanor Terrett's fantastic post, who scooped this for Fox Business. If you don't follow Eleanor Terrett on X, you should do so immediately. Well done, as usual, Eleanor. Okay, so it will be very interesting to see how that plays out. If anything, it's like to some degree, if you're a basketball player and you complain that you got fouled and you keep making your case, they're never going to overturn the penalty because you were complaining and making your case. But if you point out something that they should realize was actually happening, it may make them a little less likely in the future to make that penalty call against you. So you've planted the seeds in their head. And I think that the states are planting the seeds in the head of the SEC, that the states have rights and their overreach is negatively affecting their constituents across this entire industry. And we'll see what effect that has. All right. So enough of that. On the Trump cabinet appointees, it's been very interesting. The one that I am most kind of excited about is Treasury Secretary. That appointment has not yet been made, or the nomination has not yet been made. We have Matt Gaetz nominated for Attorney General, Tulsi Gabbard nominated for Director of National Intelligence, Marco Rubio nominated for Secretary of State. Dan Scavino will return as White House Deputy Chief of Staff. There are more, right? So there's appointments for legislative, political, public affairs. Anyway, they have been coming fast and furious. Elon Musk and Vivek Ramaswamy have basically agreed to become co-chairs, co-heads of the Department of Government Efficiency, affectionately nicknamed Doge, not necessarily after the meme coin, but we'll take it. We'll take any mention that we can get here. But Trump said in a statement, this is an important one, folks, because this does affect our investments long term. He said in a statement that they will offer advice and guidance from outside of government and focus on making changes to the federal bureaucracy with an eye on efficiency, including through spending and regulatory cuts. So I think this is a big deal. I think we should take Elon at his word that he is, and Vivek at their words, that they're going to dig in and recommend broad sweeping cuts and point out potentially trillions, if not hundreds of billions of dollars of inefficiencies in our current government. We've had appointments for the Secretary of Defense, Pete Hegseth, who is an amazing combat veteran, served in Cuba, Afghanistan, Iraq, National Guard. He was a veteran on the Concerned Veterans for America nonprofit that he started. And I mean, just very impressive guy. CIA director John Ratcliffe, William McGinley, GOP lawyer, will be White House counsel. Steve Witkoff, who got some infamous press the last few weeks for their work in creating World Liberty Financial, who's a major GOP donor and well-known real estate developer in New York City, will be Trump's special envoy to the Middle East. He's very well known, very active in the Israeli community in the United States. Mike Huckabee is going to serve as his envoy to Israel, which I think is super interesting. Didn't mention Mike Waltz is going to be National Security Advisor. South Dakota Governor Kristi Noem is going to be Secretary of the Department of Homeland Security. I think these announcements are fantastic. I think that this group is going to drain the proverbial swamp. And as far as I'm concerned, it's not going to come a moment too soon. All right, so we'll have more to say on that in the coming weeks on Money Talks, especially as it affects our investments, which is what we are really focused on here. This is not a political show, but we do care about how politics affects our financial well-being. And it does, right? And I think these changes to government will be a net positive in the short, mid, and long term. All right, so let's talk about, for a moment, the effect of podcasts on these future elections, right? So my understanding is the Harris campaign, and again, this is where the money hits the road, as they say. The Harris campaign spent over $1 billion on this current election cycle. $1 billion. And they're actually in debt coming out of the election, right? Trump, on the other hand, I believe I read, spent something like 300 million. So less than a third, got significantly more votes, won the popular vote, swept the House, swept the Senate, and obviously won the Electoral College, which is the most important point of winning in a presidential election. But he spent less than one third of what her campaign spent. The difference, and this is really important from an investment perspective, because there's a big lesson to be learned here for entrepreneurs, a big lesson to be learned for private equity and venture capital investors, right? For my own team at Avra, I hope you're listening, right? Earned media is where it's at going forward. What is the difference between paid and earned media? Earned media is you being able to take advantage of someone else's audience. It's President Trump going on Joe Rogan, on the All In podcast, right? On other Lex Friedman podcast, right? It's Vice President Harris going on Howard Stern, right? These are existing audiences that you take advantage of. They have earned their audience by providing compelling content. Paid media is generally advertising. It's advertising directly to constituents in Pennsylvania, in Florida, in Georgia, and all the battleground states where most of the $1 billion seems to have gone. Actually, in her case, a lot of it seems to have gone to pay celebrities, people for speeches, venues, a lot of crazy shit. I don't understand why a presidential candidate is paying anyone to speak. It's absurd, but they are. Right. And so hopefully this is a lesson for everyone on what it means to take advantage of earned media in favor of or over and above and beyond paid media. And that is the biggest takeaway from me, is the power of the podcast. Podcasts are here to stay. Long form works. We got to know the man, the candidate, and the short form paid gotcha one-line ads were completely useless. And if anything, short-form TikTok was more effective than short-form paid media. All right. So, all right, let's talk about markets for a few minutes. I think this is really interesting. So clearly, right? Clearly, the crypto markets had not fully priced in, from a risk perspective, a Republican win across the board, meaning Trump taking the White House, Republicans taking the House and Senate. That was not priced into markets. So here I'll show you the price of Bitcoin. You can look on this chart. You can see where my cursor is, but even if I didn't have my cursor on November 5th, you can actually pretty much tell where the election was, because Bitcoin was trading at, let's say, right at 68,000 the morning of the election, and within 1, 2, 3, 4, 5, 6, 7 days, 9 days, it hit 90,000, right? So Bitcoin was theoretically almost 30% undervalued, in my opinion, because of the regulatory overhang of the United States. So that tells you three things, actually. One, it tells you how important the regulatory state of affairs as it relates to crypto is in the United States, which is like, what, 300 and 400-ish million people out of 8 billion, right? So that shouldn't be, but it is. Okay, that's number one. How big? Number two is how big the U.S. is from an investment perspective as it relates to crypto. Clearly, the U.S. still reigns supreme. And three, how bullish everyone is on a potentially new and friendly Trump administration versus the hostile, negative feedback loop that we experienced for the last 3.5 years from the Biden, Warren, Gensler cabal, and the prospect of removing them from power, at least in terms of oversight and regulatory overreach, which is what we've been dealing with for the last 3.5 years. So that's very exciting. Markets have pulled back from the highs of 94,000. So even in a friendly environment, nothing is going to go straight up. We've pulled back from, I think the high was right at 93,500. We're right at about 87,000 right now. So it's still a remarkable run of close to $20,000 in the price, actually over $20,000 in the price of Bitcoin in a matter of 9 days. Absolutely remarkable. Never thought I would see us approach 100,000 so quickly after the election. I knew it would happen. I just didn't think it would happen in a week. Absolutely crazy. Some really interesting meme coin action. Here is the Trump derangement syndrome meme token. I'm not a proponent of people going out to buy meme tokens, but here you have a meme token that was effectively gone from, I don't know what it's at right now. It's clearly marked as a sell recommendation here, but it's got a market cap of 9 million, and I think it had a market cap of like under 1 million when the election happened. So TDS, Trump derangement syndrome, I think is pretty amusing. But the big takeaway here is that clearly a regulatory right-sized environment for crypto is super bullish for the space. Okay, I still believe that the structural issues of the U.S. should not be underestimated. And we'll come back to my concerns on the Treasury market in a moment. But in the meantime, right, we've got some really interesting news in the crypto world that I think are also going to affect the markets. By the way, Polymarket is actually a crypto-based product. I think most of you who watch Money Talks probably know that. I forget which L2 it uses. But anyway, the CEO of Polymarket had his home raided and his electronics confiscated by the DOJ, FBI a couple of days ago. Absolutely outrageous, and gave no explanation to the public or to the person who had his electronics confiscated as to why they were doing that. Absolutely outrageous behavior. Just shows that we need this weaponization of the US government from a political perspective to completely end. And I believe that it will end in the next administration. Bitcoin Magazine announced that Senator Loomis announced or told them that she believes that we can pass a Bitcoin strategic reserve bill in the first 100 days of Trump's presidency. It's almost like we're living in a simulation now. It's amazing how fast and furious some of these announcements are coming. The idea would be that over a several year period, the US would accumulate at least 1 million Bitcoin, which is a little less than 5% of the total supply, but likely more than 5% factoring in the breakage that's occurred. Breakage in this case means Bitcoin that's been lost forever because people got it very early, 14 years ago or 13 years ago, whenever, lost the keys. And in the aggregate, that's probably a few million Bitcoin at least. So accumulating 1 million Bitcoin could easily drive the price of Bitcoin to $1 million per Bitcoin. Easily. Okay. Not a price prediction, but I could certainly make the case how that could happen. Now, not to be undone, several states are starting to look at adding Bitcoin to their own strategic reserves. Today, the Pennsylvania legislature, right? This is astounding. I'm going to read it right from the release. The Pennsylvania legislature has introduced a pioneering piece of legislation titled the Pennsylvania Bitcoin Strategic Reserve Act of 2024, HB 2664. It is aimed at positioning Pennsylvania as a leader in leveraging Bitcoin as a strategic asset to combat inflation, strengthen the state's financial resilience. Absolutely remarkable. So public support for these kind of state-based initiatives continues to grow. I'm going to be presenting at the North American Blockchain Summit in Texas next week. I'm having dinner with the folks that put together this legislature to start helping them to make this a reality, not only in Pennsylvania, but in states all over the country. One of my personal strategic goals in the coming year is to get very involved in helping states put Bitcoin on their balance sheets, just like we've been helping companies put Bitcoin on their balance sheet, right? Abra Treasury is a product that enables not only individuals, but companies and nonprofits to put Bitcoin on their balance sheets, just like the MicroStrategy playbook now allows you to do. So really excited about that. And we'll see. I'll have more to report when I get back from the event next week on Money Talks. But I'm excited about that, and I'm looking forward to seeing some friends at the event as well. All right, so I need to talk to you about Treasury Markets before we talk about where crypto is going, okay? So I've got some charts here I'm going to show you, but it does appear that the U.S. government debt market has begun to collapse. I can't emphasize enough the implications for the economy that this could have, right? It's so severe and so complex and so potentially painful that nothing that I'm going to say is going to do justice to how serious of a problem this is. U.S. government bonds have broken below a 40-year uptrend. After experiencing one of the most painful bear markets since the 1980s. Now, Treasury bonds are typically 40%-ish of an investor's portfolio, right? This has led to big losses because of the sharp decline in these Treasury assets. Since March of 2020, gold has outperformed bonds by 100% amid massively surging government spending. We know what happened during COVID. Government spending has risen from a little over $3 trillion to almost $4 trillion now in just 2 years. That is an insane, incomprehensibly large number. Constantly rising government spending, financed by issuing more Treasury bonds, is a major problem. Again, I know it sounds like hyperbole, but I can't emphasize enough how big of a problem this is. This has caused bond prices to drop significantly. You keep printing more money financed by more debt. Eventually, you're going to run out of people who want to buy your debt, and you're going to be the only person who can buy it. And then you're going to buy it by printing more money yourself, which creates a never-ending negative feedback loop, which we're now approaching. It's not good. 2024 Treasury bond issuance is expected to hit $2 trillion. This level is higher than even the peak of the 2008 financial crisis. Significantly higher. I think that peak was around 1.3 or 1.35 trillion. Our long-term bond outlook is super, super bearish, folks. But with ongoing rate cuts, bonds could certainly have a short-term bounce. The problem is that people logically associate the interbank lending rate, which is actually the rate that the Federal Reserve sets. The Federal Reserve doesn't set Treasury bond rates, right? Bond markets are free markets. You can buy and sell Treasury bonds for any price you want, any price the market will bear. And what happens is that if you keep issuing more and more debt, the demand, right, for new debt or existing debt is logically going to fall over time. There's simply too much of it. So if the demand falls, the value of the debt falls, right? And the price of debt moves inversely to the actual interest rate. So if the price of the debt is falling, interest rates are going up, and that's what's happening. Expectations in the market are, in the future, much fewer people, much fewer institutions are going to want to buy our debt. You've heard me say this over and over again. No one wants to buy our worthless debt. The chickens are coming home to roost, as they say. Why is this happening? A key factor, that, in my opinion, that's driving this disconnect between the Fed's lowering rates and rising treasury rates, right? A key factor that's driving this long-term breakdown in bonds is the huge decline, significant decline in labor force participation rate. Now, since 99, 2000, this metric has shown a strong negative correlation to U.S. government debt, as you can see in this chart here, which is from the U.S. Bureau of Labor Statistics. It basically shows that labor force participation rate is falling and total public debt as a percentage of GDP is increasing. The two are basically moving inversely in tandem. So I believe that many Democrats would make the case that we need massive immigration into this country to reverse this trend. That may be true, but they can't do it the way they've been doing it. I'm all for massive immigration into this country, but I'm into immigration in a way that actually increases GDP over time because people are adding value in a way that's been deemed legal by the public. We need that, folks. Have no delusions about it. So decreasing labor force participation plus increasing government debt indicates significant economic strain. So we have an increasing number of retirees and a shrinking workforce. The combination has compelled the government to simply increase its spending because it doesn't know how to decrease spending. They simply don't understand how to do it. But with the U.S. population aging and even more people retiring, labor force participation is going to continue to decline even further. This would further increase government debt unless we basically set up a situation where the public is not dependent upon the government. Spending is the answer. Spending has to change. That's why this DOGE, or Department of Government Efficiency, is so important. Between defense spending, entitlements, waste, it's out of control. This is why gold has seen a lot of bullish sentiment in recent months, but actually started to fall when Trump won, was because people see a potential future where government might actually be spending less, right? I think that's going to, the reality is going to set in the coming weeks that any of these changes that are coming are actually going to take months and years, more likely years, to have an effect on the American and global economy. So in the short term, I suspect we'll get back to game on for gold. We'll see. Certainly game on for crypto, which tends to get an outsized percentage. It's almost like a levered bet on inflation and money printing continuing, right? So anyway, that's my explanation for what's happening in the Treasury markets. And if we don't get our financial act together soon, right, it is going to be Armageddon in the United States and around the world because so many countries are holding our debt, especially China and Japan. And they know they have a problem because if they dump treasuries, it's going to cause a global collapse of our economy. Okay, so let's hope that the United States leads the charge in getting its house in order. In the meantime, I expect that that Bitcoin will continue to rise in value. Solana, Ethereum, they will continue to rise in value. It's not investment advice. Nothing goes straight up. Do your own homework. Figure out your own risk tolerance. But, I think it's really interesting. Okay. So that's my take on crypto. It's my take on where we are from a political, regulatory perspective. I think it's going to be a fascinating few weeks and months as we start to navigate that. I think that you're going to see a lot of movement in crypto prices. It's going to be extremely volatile. Let me bring up a couple of charts here. We'll close that out with some charts. Here's the price chart for Solana. You can see that Solana was ranging basically from, let's say, mid-March through the election. And clearly we had a breakout over the last weekend after the election, and the breakout was basically at right around the closing price of 202, and today we're at 214. I think personally that Solana is going to Valhalla, and it's going to be a beautiful thing. I think the alternate L1s, SWI, Aptos, Solana. Here's the price chart for Aptos. Aptos is now rising. It's pulling back the last 3 days, but had a fantastic week. The rising star has really been SWI. I mean, this one is just unbelievable. Look at this. So basically, it started to run more or less in early September. It was trading at 78 cents, and it is now at $3.33. So basically a 4x run, a 300% plus run in about little less than 10 weeks in SWI. So absolutely remarkable. Congrats to those of you who invested in SWI. We did talk about it in the past. You can see here it's kind of been a balloon being held underwater as well. Super interesting. Mentioned some of the meme coins. There's this GOAT, which we've talked about. I should mention we're going to do some episodes explicitly on AI and where AI and crypto meet. This GOAT token, I think, is related to this AI bot that has been trending on Twitter for several weeks. Here, it created the token back in mid-October, where it was about 5.5 cents, and now it's at 93 cents, which is absolutely remarkable. Yeah, I mean, I have fun with some of these meme coins on occasion, but it's like, a fraction of a percent of anything I might invest in crypto. And I would encourage you to not put your net worth into meme coins. But, if you want to have fun with it and track the memes, it keeps me close to some of the pop culture. I mentioned the Trump derangement syndrome token. I've mentioned Mother. I've mentioned Bonk. Bonk has clearly broken out of its short-term, sideways action from the summer. It hasn't reached a new high versus where it was in the spring, but it looks to be headed for that now. It's had a super interesting run the last 6 or 7 days or so. One day, I think it was Tuesday, it was up like 40% in one day. Again, tread lightly with these meme coins. They're kind of fun, but just be prepared to lose all your money. It's kind of like the casino of crypto. Whereas for my real investments, I look at high quality L1s that I think are going to get a lot of usage, a lot of value. Solana, Aptos, SWI, even Ethereum has had an interesting breakout from its sideways action from August. And, it peaked last week at 34.50. It's pulled back to about 3,100. I wouldn't be surprised to see it have a very significant run. Probably not the kind of run that I would expect Solana or SWI to have, but certainly interesting. I tend personally to focus less on the L2s because there's just so many of them that I don't think that they financially are viable investments long term. They may get bumps that kind of let them ride the coattails of the crypto markets. Again, that's just my personal opinion. If you see it differently, then please invest accordingly. But that's how I'm looking at it. XRP got a bump today. I think it was mentioned by both Chair Gensler as well as Elon Musk. I don't know why, but it's up 16% today as of the recording of Money Talks. And again, on the election, it was trading at about 50 cents. And as of today, it's trading at about 80 cents. So up about 60%, while crypto, more broadly speaking, Bitcoin, Solana, Ethereum, was up about 30-ish%. So 2x the run of Bitcoin over the last few days. Hard to say if people believe that, maybe the pending, I don't know what you call it, the appeals by the SEC of the losses they suffered in the Ripple case, might go away as a result of the Trump win. But who knows? Certainly there's a reason for it, and it's up 16.5% now, and it's continuing to run. So we'll track that. I don't spend a lot of time on XRP or Ripple, but it does look very interesting. All right. So as of the closing here for Money Talks, we're at $215 per Solana. We are at $88,000 per Bitcoin, 3,115 for Ethereum. We are at $3.37 for SWI, and $11.52 for Aptos, which I think are the key L1s that we should all be paying attention to right now. The dollar went on an absolute tear versus the other currencies that it tracks. It's gone from, let's say, $100 all the way up to $106 and change from October 1st through today. So basically in about 10 weeks or so. Clearly, the dollar is strengthening versus other currencies because there is a growing belief that other countries may face tariffs for exports to the United States and would probably counter those tariffs by weakening their currency in order to make those exports more affordable to the brethren in places like the U.S. that might be initiating said tariffs. We'll see if that turns out to be a founded fear or not. I think there's a case to be made that it is, but time will tell. All right. While I was speaking, XRP went up another 1.5%. It's up over 18% for the day. So really interesting run on XRP. All right, so we're going to call it there. Hopefully this was useful information for you. Let me know in the comments on YouTube or on X. Smash the subscribe buttons, please. Follow Abra Global on X/Twitter. Subscribe to our YouTube channel. Subscribe and follow us on Spotify and Apple Podcasts. We do this so that you can get informed. This is not my day job. My day job is running Abra, but we bring this to you to help you stay informed. And in response, it would be great if you could follow us on those channels. Again, click the subscribe button, the follow button on X, the subscribe button on YouTube or Spotify or Apple Podcasts or wherever you get your media from. All right, in the meantime, have a fantastic weekend. I will see you all next week on Money Talks. Take care, everyone.